Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday the Australian dollar rallied or propelled itself to a fresh two-year high at 79.86, mainly staged from the upbeat domestic job release, which came in at 14,000k. It was one of the most solid increases seen in 29 years. However, the Australian dollar did lose its footing and raised all the gains of yesterday to a low of 78.97, right in front of the support at 78.90. In light of the long-tailed doji here, I expect to see another round of weakness, and any attempt towards the top side should now find resistance firmly from 79.95 to 80.20 and look towards a break of 78.90 to expose the next target of 78.50 and reassess from there, with the technical implications also breaking down, does support this view. Well, it would seem that the price action for euro was very mixed. After initially plummeting to a low of 114.79, the market staged a very aggressive rebound and took out the 116 handle and printed a high of 116.58 after ECB President Mario Draghi press conference began. With the ECB leaving interest rates unchanged, President Mario Draghi said that the decision to keep the monetary policy unchanged was unanimous. Now, looking at the market here, you can see that the attempts over the last few years above 116 have not sustained, and I do expect to see this pattern to repeat itself and reverse itself from 116.55.65 and look to the uptrend that comes in at 113.65.75 and reassess from there. Technically, we are overbought. There's only one concern, is that the US dollar did print a fresh 11-month low of 93.89 to the index, but it is extremely oversold. So I do expect to see a rebound in the US dollar. Looking at that, the dollar yen could now hold above that 111.1025 support and look towards that minor resistance at 55 or around that 112 mid and look towards higher if breached to the level of 113.20 and reassess from there. Do note though, if we do get a break under 111.10, I see no technical support level until 109.30.50, but with the technical implications slightly now in oversold territory, could see this market recover, especially with the long-legged doji that's in there. As you can see, posted overnight, does show some hesitance about the market setting off. Well, the pound is weaker since the rejection this week of 131.25 and now taking out the level of 129.50 looks for further weakness, with the immediate target seen at 129.25 to 128.60.65, which could see profit taking return to the market and maybe a small recovery. With the technical implications breaking down also does support this view, with any advances now capped around 130.10.20. Well, the price action for gold repeated itself after suggested of a pullback or buy on dips. The market did fall back closely to that 12.32 to 33 level and rebounded to weaken the resistance now at 45. In light of the pattern, I do expect to see further tests to the upside. Now, if we break above 45, that would give further exposure to 12.52 to 59 before seeing any reversal. On the day, again, I do expect to see demand to return in front of that 38 level, or even further where that base is at 32 to 33. And to wrap up with oil, but it would seem the market did reject that level of 47.65, and if it is a strong rejection, now could continue on to challenge the 46.40.45 support and reassess from there, as a break beneath there would give an exposure to $44 a barrel. Any advances should now fail, as this technical outlook is breaking down for the oil. So that wraps up my daily video. Thank you very much for joining me. I hope you have a great day ahead and a wonderful weekend that's about to begin.